What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update video is a little bit of the price action that we're seeing on AMC today. We are just getting into power hour. So at the current time, we are trading above max pain, but I would not be surprised at all if we finish right around that max pain price of $40 a share. Now, for those of you guys who don't know or who are still confused, the max pain price is just the price that the maximum amount of options, calls, and puts are expiring out of the money. We're going to take a quick look at Ortex, a little bit of a look at the options chain, and then we also have a very interesting analytical piece from Investor Place about AMC's free cash flow and what that could do for the fundamental value of its share price going forward. But we have some really important developments from the SEC. A lot of people have been up in arms over the last couple of weeks and months talking about the SEC needs to do something. Well, we all knew that this was going to take some time, but with what the SEC has released over the last 24 hours, this is a really substantial step in the right direction, and it has to do with securities lending. Now, we are going to go over something else that FINRA is also working on getting out in terms of short interest reporting. And if these two things can get implemented and approved, this is going to give us a peek behind the curtain as to what exactly has been going on with all of these stocks in terms of the potential for manipulation and who the key players are that are shorting these given companies. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you guys go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So when we come over and take a look at the Ortex estimate for AMC, we're seeing the utilization kind of bounce around. Now, a lot of people are a little bit worried about this and don't necessarily know what this means. Utilization is just the shares that are actually being loaned out, not necessarily the shares that have actually been shorted, just the shares that have gone out on loan versus the amount of shares that institutions are willing to lend. Now, with the way that we're seeing the utilization react this week, you can't really make or draw a good conclusion on what exactly is going on. What we'll have to really wait for is the next time the exchange reported short interest comes in, and then we're going to see all of these numbers get updated again. Now, that's going to happen in about a week, so we really just have to take these Ortex numbers with a grain of salt until then, or even an extra grain of salt until we receive those new numbers. But we are seeing the estimated short interest as a percentage of the free flow at about 15.57%. Now, when we come over and take a look at the option chain for this week, there's only 29,000 calls in the money. Let's give this a quick refresh to see if this changes. Okay, so we have 36,000 call contracts in the money with 257,000 contracts out of the money. So when we're looking at this specific options chain for this monthly options expiration date, it's not enough to cause any significant gamma squeeze, just like we've been saying over the last couple of weeks, and why I've been focusing in on that January expiration date. Now, when we think about the max pain price being at 40, and we're seeing right now AMC trade at 41 above that max pain price, remember, AMC is going to have a lot more open interest on the upside and a lot more people making bullish bets to the upside. So if we're finishing above the max pain price, that is going to hurt these institutions more than if we were to finish below the max pain price. But when we take a look at the options chain, the amount of contracts that would run in or out of the money around 40 is really negligible on the call and put side. So I'm guessing that these market makers really don't care a whole lot whether it finishes at 40, 39, or anywhere in that range. Now, when we come over to this article right here, we can see that AMC is set to return to free cash flow profitability, could rise to 52. So this is going based off of the fundamentals of the stock. If AMC is able to generate positive free cash flow, then its fundamental value will increase. Now, when you think about the short thesis on AMC, it's purely based on fundamentals. If eventually over the next couple of quarters we see AMC reach those free cash flow profitability numbers, that is going to be very, very solid for not only shorts getting worried about their position, but if other institutions see that the fundamentals of this company is getting better and the price is slowly moving to the upside, then we could see more institutions start to pile in, and that would give us even more buying volume. Now, let's get into this new securities lending development. If you guys were on the stream this morning when I essentially just found out about this, I was so excited about what the details of this were. So when we come over to this Unusual Whales tweet right here, breaking, the SEC proposes transparency to the securities lending market where short-selling hedge funds borrow shares to bet against stocks. It would require firms that lend securities to report on loans to an oversight body like FINRA. We'll go over exactly which oversight body that will be within 15 minutes of making the loan. So that's pretty interesting. So when we come over to the actual sheet right here, it's a 184-page document. There is a concise and kind of boiled down fact sheet that we're going to go over, but this section I think is very important. The securities lending market is opaque, meaning you can't see through it. It's very non-transparent. Section 984 of the Dodd-Frank Act provides the commission with the authority to increase transparency, among other things, with respect to the loan or borrowing of securities. It also mandates that the commission promulgate rules designed to increase the transparency of information available to brokers, dealers, and investors. Although various market participants, such as registered investment companies, are required to make specific disclosures regarding their securities lending activities, parties to securities lending transactions are not currently required to report the material terms of those transactions. The value of the securities on loan in the United States as of September 30th, 2020 was estimated at almost 1.5 trillion US dollars. Yet, despite its size, the securities lending market in the United States has a general lack of information available to its market participants, the public, and regulators, and that is looking like it's going to change. So let's come over and take a look at some of this information on the fact sheet. So how this rule applies. Proposed new rule 10C-1 would require lenders of securities to provide certain terms of their securities lending transactions to an RNSA. And then coming up here, we're going to see that the RNSA is essentially just a registered National Securities Association. So any person that loans a security on behalf of itself or another person would be considered a lender under the proposed rule, including banks, insurance companies, and pension plans. But here's what's going to be required in these transactions now. The legal name and issuer of the securities to be borrowed, the ticker symbol, the time and date of the loan, the name of the platform or venue if one is used, the amount of securities loaned, rates, fees, charges, and rebates for the loan as applicable, meaning you're going to see the individual cost to borrow for every single loan transaction or securities lending transaction that happens, the type of collateral provided for the loan, and the percentage of the collateral provided to the value of the loan securities. That is a really important piece. We do not know right now if the margin requirements are getting messed with, if some of these brokers are just allowing their clients to short stocks while basically skirting around some of these margin requirements, the termination date of the loan if applicable, and borrower type. But here is where it gets very interesting. The legal names of the parties to the loan, meaning that we are going to see who is lending these shares out and who the loans are going out to. That is a very, very important piece that we have not been able to see. The second really important piece, whether the loan will be used to close out a fail to deliver pursuant to Rule 204 of Reg Show, or whether the loan is being used to close out a fail to deliver outside of Reg Show, meaning that the SEC knows right now that some of these shares going out on loan are being used to close out failure to deliver positions. Now, in a stock like Prog or AMC a couple of months ago, when the failure to delivers were skyrocketing and they ended up on the threshold securities list, we are going to see if these shares that are going out on loan are being used to kick the can down the road. These institutions that are trying to mess around with our market right now, especially in the securities lending market with all these FTDs, the overshorting and the over leveraging of a lot of these different positions are going to have nowhere to hide, and we're going to be able to see everything that is going on, which I think is incredibly important. So right now, this is not in effect. It is just a proposed rule change, but we do have another proposed rule change from FINRA that we brought up a couple of times in the past that I think is incredibly relevant. And if these two proposed rule changes go into effect, It is not just going to cause the MOAS, guys. These proposed rule changes aren't really meant for that. This is more for the long-term health of the market, but it is going to give us a lot more insight into exactly what is going on. And when we come over here, this is FINRA 21-19 that I brought up a couple of times. And when we look at what they actually want here, it's essentially short interest reporting, synthetic short positions. In addition, FINRA is considering requiring firms to reflect synthetic short positions in short interest reports. For example, enhanced short interest reporting could include synthetic short positions achieved through the sale of a call option and a purchase of a put option where the options have the same strike and expiration month, or through other strategies. Now, this next piece down below is pretty interesting. Loan obligations resulting from arranged financing. FINRA understands that members may offer arranged financing programs, sometimes called enhanced lending or short arranging products, through which a customer can borrow shares from the firm's domestic or foreign affiliate and use those shares to close out a short position in the customer's account. FINRA is considering requiring members to report as short interest outstanding stock borrows by customers in their arranged financing programs to better reflect actual short sentiment in the stock. When you combine FINRA 21-19, and I believe this rule right here is called 10C-1. Yep, we can see right here. These two rules are big, guys. This is going to be something that we need to keep digging into. And I'm going to try to read through this 184-page document over the weekend to see if they left out any really important information from this fact sheet. But this is really big, and it is a step in the right direction in making our markets more transparent. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great week and end of the week, and I'll see you guys in the next video.